Believe it or not, you guys can still get a 3%, even 2 to 3% interest loan. What? What is going on, DeRosa Insiders? This is Matt Faircloth, and welcome to the Cash Flow Digest Show. This is a show dedicated to the thing that I think is the most important in real estate investing, and that is cash flow. My name is Matt Faircloth. I'm the host of the Cash Flow Digest, along with the DeRosa team here at our awesome company, the DeRosa Group. If you guys want to hear more about what we do, go to DeRosaGroup.com to hear more about what we do, including awesome passive investing options that produce that funky thing that I just talked about called cash flow. If you guys are watching this program on Spotify, thank you. This is a fully broadcast podcast on Spotify. Lots of folks are downloading. It's doing really well there. So if you guys are joining us on Spotify, thank you. Please do me a favor and like the show, write it a review, give it a 5-star on Spotify. We'd love to have your support there. The way that you're watching this program live, the way you can ask questions of our guests, the way you can ask me questions, the way you can pick our brain, do whatever you want to do here live on this show is by going to Facebook.com/DeRosa, our company name, Insiders, DeRosa Insiders. Join that private community. It is free. Believe it or not, you guys can still get a 3%, even 2 to 3% interest loan. What? 2 to 3% interest loan on a single family residence. There is a great company out there that is coming out on what they do called Rome, ROAM, Rome, that's new to the market. They just got their seed round funded, and that we got this article here off of Housing Wire. Interesting conversation on what Rome is doing. What Rome is doing is they're going out and they're taking a concept that has existed pretty much since real estate investing has been around, and they're allowing people to buy properties as real estate investors do as homeowners. And the concept that they're using is something that happens in real estate investing in multifamily and in single family homes all the time. And that is the concept of buying a property subject to, right? Buying a property subject to the existing mortgage. That is something we've done in multifamily housing, apartment buildings. We bought subject to many times. And that is something that we're seeing happen more on smaller scale real estate. My good friend, author of the foreword for my book and author of Wealth Without Cash, Pace Morby, and star of the A&E program that's out there on real estate investing as well. You guys might heard of him, but Pace Morby is an expert in the subject to field. Subject to, in essence, is going to an existing owner and saying, hey, I see you either need to or want to sell, and I need to buy your property from you. I would like to do that. But the thing is, I don't want to buy it subject to today's rates of 7, 8, 9% interest. What if, Mr. and Mrs. Seller, what if I could give you perhaps some sort of a check, or maybe just I take this property off your hands if it's not doing well? What if I just take this property from you and I take it subject to the existing mortgage? What that means is I'm going to transfer the deed. I'm going to take the property, and the mortgage is going to move over with that property. So if I'm buying the property for $200K and there's a $150,000 mortgage on the property, I'm buying the property and I'm moving that mortgage over to me now being the payee for the mortgage. And that the guarantor may be someone else, maybe the prior owner, but maybe for some compensation or maybe just to get the property off of their hands, they're willing to transfer that mortgage over to me and transfer the deed to me. And while the mortgage moves over as well, and I start making those monthly payments. That's called subject to, guys. Pace is an expert on this topic. He's someone I've learned quite a bit from on the matter from. And it is something that a lot of multifamily assets transfer subject to. It is something that happens a lot in the real estate investing world. It's called buying the property on terms, is another way to say it. And what's happening now is in the single family world, if I were to buy a single family home right now, interest rates would probably come in around 6.5%, 7%, maybe more, depending on the structure of the debt. Well, everybody buying single family homes is going to buy that single family home based on monthly payment. The monthly payment that they're going to make is going to be paid by their earned income, right? And the problem is that the $300,000 house or $500,000 house has a much higher monthly payment tab now because rates have gone to 7%. So what if I'm buying a house for $500K, what if I could take over the payments from the person that I'm buying it from? Well, Rome has figured this out on how to do it. It's something that's going to come way further into the market. Here are some things that I'd like to see how Rome is going to figure this out. Right? Let's be straight. What is the loan transferable? Is it okay to do this? And people ask, well, is this subject to legal? Well, it is something that gets asked a lot, and Pace would tell you that it certainly is legal, and there is something called the due on sale clause that could come up. But it's not like the awful boogeyman. It is something that has come up and has happened to him. But the bank's not going to say, hey, you sold the property, I'm going to call up the due on sale clause on you of the mortgage that says that when the property's sold, the mortgage must get paid as well. If the bank decides to call you in default, they're going to give you probably 90 days to cure. So worst case scenario, the homeowner would have to refinance their home and refinance the property to a new higher interest debt is what it is. But until then, they can enjoy those lower payments. right? Probably the due on sale clause is the biggest issue I see with homeowners getting involved in this, because homeowners are buying properties based on the monthly payments that they make. A real estate investor is more savvy, maybe has to make those business decisions and understands that if I buy a property subject to at 2.5%, 3%, that's a risk I'm taking as a real estate investor, and that's the risk that I have. And so I might need to refinance it at some point in the future if the due on sale clause gets called up, right? So that long story short, that is something real estate investors is taking a calculated risk on. And if they've read books that, like, folks like Pace Morby have out there, they're aware of it. The problem is, if a homeowner is buying a property subject to at 3% and the bank comes and calls up the due on sale clause, there is a chance that the homeowner is not going to be able to pay that increase in monthly payments if the property has to refinance, right? So that's a big factor that I'm curious to hear what Rome has to say about that. So that's just a question mark I'll toss out there. The second factor I'll toss out is, let's say someone is looking to buy a $300,000 house, and the homeowner that owns the house now, that has their home up for sale, is willing to allow their mortgage to be assumed, and that mortgage has been paid down to $300,000. So that means that the buyer, to assume that mortgage, would need to come up with $200,000 to get a $500,000 house. Well, as a real estate investor, what we do is figure things out. It's great. That's why we get compensated, because we figure out problems like that. A real estate investor would approach that situation and say, okay, 200K, great. I'll either go and raise it from a private investor, right, to get my Aunt Sally, and use the technology that's in Raising Private Capital, my book, to figure out how to come up with that 200K. That's one way that they would do it. Another approach they may have is to go to the seller and say, hey, I'm going to be assuming your mortgage of $300,000. I'd like for you to loan me a seller second mortgage. We're going to put a lien on the property of that 200K. And so I'm going to be making a monthly payment to your bank and a monthly payment to you, right? So I'm sure other solutions you guys could think of out there. Maybe the real estate investor just has 200K they want to plunk down onto the property as well to do that. Likely not the case for a buyer of a single family home. Most buyers on single family homes go in at the most at 15 to 20% down. A lot of them want to go in with laying less than that down, right? So the solutions there that Rome, I'm sure, has thought of is Rome itself as a company. Maybe they are looking to issue that loan, that second mortgage position loan on the property, as a private investor with collateral on the property. Maybe the buyer would be willing to take on a second mortgage from the seller, right? Maybe the seller would be willing to do that. The reason why I don't think that's going to happen all the time is a lot of times the sellers of healthy single family homes are going to want that check, that equity check, so they can go and take it and go buy the next property down line, or they're going to want to take a cash out. They're not going to want to get monthly payments forever and ever, right? So I don't know if that's going to happen as frequently. If it is possible, they could be enrolled in this. The problem is that someone needs to convince the buyer and seller that this thing is going to work, and that here are the alternative terms on how buying a property subject to is okay. There's a big education curve that needs to happen for residential folks to be buying and selling properties sub to, and what to do with that equity gap. Now, I'm sure Rome has thought of this. It is founded by some folks that have a strong background in real estate and strong background in banking as well. So that is perhaps something that will get brought up when their investors go in. I'm not involved in the company in that, but I do think it is something that is very, very interesting, let's say. And it is probably some way that maybe the party of single family and residential real estate gets to keep going through concepts like Rome is coming up with. All I want to say is that it is interesting, and it is something that I think will become more of the future. I'll leave you guys with this, is that for single family homes to continue to transfer, for things to continue to sell, we're going to need to get creative in the single family home world. To keep single family home real estate thriving, creativity is key. The world of subject to, the world of keeping interest rates down, is maybe working its way into the residential side for home ownership. And that's really just a sign of people needing to get creative for homeowners, and homeowners maybe need to get a little more creative as the way they do deals. I think this is the beginning of creativity, and the company Rome that is maybe leading some of that creativity that's coming into the home ownership market. So if you want to be a pioneer on changes that are happening in the home ownership market, find ways to bring concepts that exist all the time in real estate investing and bring them into the mainstream for homeowners to take advantage of as well. Guys, I appreciate you guys watching this program. This has been the Cash Flow Digest. If you guys want to watch this program live and ask lots of questions and interface with our guests and ask me questions about all kinds of cool stuff like accessory dwelling units and all kinds of cool stuff, go to DeRosa Group at DeRosa Insiders on Facebook. DeRosa Insiders on Facebook. If you guys want to hear more about what we offer from a realm of passive investing or education products, go to DeRosaGroup.com. Thank you for watching, guys. And as I always say on the YouTube channel, have a great and profitable week. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.